Hi, Josh Barker. First and foremost, I'm very excited to resume our monthly market updates for all of you here in Shasta County. This month, we're going to be diving into some of the hottest topics that have been trending over the last 6 months here. We're going to have this serve as our mid-year review. For many of you, and I don't need to tell you this, the real estate market has changed dynamically over the last 12 months. Both locally and nationally, we're seeing home prices that are up nearly 25%, and it's really starting to cause consumers to start asking questions. In fact, on Google, one of the hottest topics being searched right now is, are we currently in a real estate bubble? So this month, we're going to dive into some of those topics. And as always, if you have any questions, feel free to reach out anytime. So first thing is on the home inventory. As many of you have realized over the last 12 months, home inventories dropped from 800 homes for sale on average. Now it's averaging just over 400 homes for sale. So our inventories are down by almost 50%. In addition to that, our buyer demand has remained extremely strong through COVID. And as a result of that, we've just watched the inventory get stripped away. So right now, home prices are really a reflection of demand and then, of course, the supply. And another way to put it is it's the supply of homes relative to demand that's having an impact on the market right now. So with that in mind, let's go ahead and move to our next topic. Home sales in the local market have increased dramatically also over the last year. Currently, we're roughly at almost 1,800 properties that have sold since the beginning of the year. That's up approximately 30% when you compare that to last year. Now, a lot of migration pattern shifts, new buyers entering the market, and extremely low interest rates are all contributing to the reasons why we're seeing such a high sales volume here in our local market. New home and multifamily construction here in Shasta County has just shifted dramatically over the last 12 months. In fact, we have a lot of large-scale developments, infill lots, and of course those fire rebuilds that we're seeing are all bringing a large amount of contractors and of course that labor associated with it to our local economy. The future of the sector right now seems very promising. In fact, D.R. Horton, one of the country's largest home builders, is even really looking around in our area as we speak. And the headwinds of possibly a higher labor costs and certainly of lumber costs are going to be some of the challenges these builders are going to have to deal with in the next couple of months. So it'll be something we'll all have to keep an eye on. Mortgage interest rates have served our community extremely well over the last 12 months. Rates as low as the mid 2% range have been quoted for consumers over that past 12-month period. Currently, rates are hovering just over 3%, and most experts are predicting that we're going to see rates into that mid 3 to even the high 3 range by the end of the year. Keep in mind, for every 1% that the interest rate increases, it could have an impact of up to 10% on a buyer's mortgage. So for example, at 3%, if you qualify for a $400,000 home, if that interest rate moved to 4%, that same buyer would only qualify for a $360,000 home. So this could be something that we'll be watching in the future. If rates go up quickly, it could have an impact on buyer demand and the price point. Loan programs have expanded dramatically over the last 6 months. In fact, 100% financing combined with the state of California grant allows many FHA buyers to buy with literally almost no money down. In addition, we're starting to see these very flexible loan programs where you can use a very limited documentation loan, and that's for buyers that are putting down larger down payments of approximately 20% and of course to prove credit. So for a lot of the folks in our community that are self-employed, those types of products help them to enter the housing market with a little bit less regulation and restriction that they used to have in years past. The next thing to look at though is how is this impact of flexible loans having an impact on the market overall? I think a lot of people are excited about buyer participation because of the flexible loan products. But for those of us that have lived through the previous housing crisis, I think we're concerned that, hey, is this going to contribute to us having another problem in the future? What I can at least tell you as of today is that the loan products that are available today are different than 15 years ago. 15 years ago, you would see negative amortization products, interest-only loans, and really fixed loans for short periods of time of maybe 3 years or 5 years that were really plaguing the market back then. In addition, there was a lot of investors buying with as low as 10% down in those times. So we had these programs back then that were higher risk than what they are today, but it's something that all of us will have to obviously watch going forward. Many of you have heard of the Eviction Moratorium, and this is where, due to the pandemic and tighter eviction regulations that the state of California imposed prior to the pandemic, it's made it harder for landlords to evict tenants when they need to. This has actually contributed to the shorter amount of inventory on the market because some of those folks wanted to liquidate those assets. And because of the restrictions and some of the challenges that they had doing that, they've decided just to hold off until things got a little bit easier. We are expecting here in the next several months that we're going to see some loosening of that eviction moratorium. And for the state of California, that would be a good thing, because now we can start to see some of that inventory that wants to come to the market to liquidate. There might be this opportunity to start seeing that happen, which could translate into higher inventories for home buyers to shop from. Like the eviction moratorium, the state and the government also were proactive with what's called the Foreclosure Forbearance. This program was designed to help homeowners during the pandemic who were that were actually under a lot of pressure to make their mortgage payment. It gave them the ability to move into a forbearance program where they could either minimize, or eliminate their payment for a period of time. Many of these types of consumers have already transferred or transitioned off of the program and have brought their mortgage current. There's another group of them that have came out of the forbearance program who modified their loan in order to move forward. And there's a final group, though, that we're looking at now, which is this group that is still experiencing major financial difficulties. And so as they transition out of the forbearance program, and if they remove, or when they remove, that foreclosure restriction, we could start to see the legal proceedings for foreclosures resume. Now, we could assume right now, currently where home prices are, that a lot of these folks hopefully have equity in their home. They may choose to liquidate those assets at that point. If not, then they'll be carried all the way through that foreclosure process and then sold at some point in an auction. So for those that are experiencing those major financial difficulties, we're going to begin to see what those decisions are in the coming months. But likely, it will contribute to, again, added inventory to the market, which obviously at this time is desperately needed. Migration pattern shifts have also been a point to look at over this last 12 months. Right now, the large contributing factor to the growth of population in Shasta County has been due to that shift. Many larger cities, both in the state of California and around the country, started to see this migration shift going through COVID. And many small communities like Shasta County experienced a population growth as that shift was taking place. We are beginning to see that migration pattern shift begin to slow down in a lot of markets, which could mean that we're going to see lower buyer demand going through in the next year from people coming from outside of the area. So again, another topic to pay attention to, and we can all watch to see what happens. This 12 months has certainly built up some seller demand, meaning that there's a lot of folks that put their plans on hold going through the pandemic, largely for health concerns, the fact that there was, travel restrictions, and then of course that the housing market was so volatile, it really put a lot of people's, plans on hold. Currently, we're beginning to see those concerns abate, and we're beginning to see more seller participation for those types of sellers coming into the market. So again, another classification or segment in the market that we think is going to add to the inventory in the coming months. The final topic we're going to talk about today is home buyer concerns. A very popular question that we're getting asked and everybody's discussing, so there's no reason to avoid the topic, is, are we in a housing bubble? Now, I can share with you that there's very smart people on both sides of the issue that have excellent points. One thing that they all do agree on, that I can see, is that they agree that the reason why the home prices are where they are at today is a reflection of extremely low inventory relative to demand and extremely low interest rates. So if any of these elements shift rapidly, then we could expect to see either buyer demand dropping off, home inventory shifting up, and we could see a disruption in the market. However, if these adjustments in the market as the pandemic passes and the economy begins to really resume a normal pattern, as that happens, if any of those levers adjust slowly, then we could see the market accommodate those changes over time, and we could just see ourselves moving into a more stable and slower growth pattern. Which way it goes, I don't think anybody knows for sure, but I can say that we're watching closely what the inventory is doing, because that's likely going to be our leading indicator as to what home prices are going to do going in the future. So in any case, if you have any other questions about what we've discussed today, know we're here to help. I look forward to speaking with any of you in the future. Make it a great day.